Hey, what's going on, guys? This is Terrence Ray, and back at you with another stock market update. But this one is going to be a little different today. Today, we're going to go over a trade that I put on today. Uh, I put on a short put spread in the SPY, right? The SPY is the ETF of the S&P 500. And let's go over the dynamics of that trade and we'll talk about it. Let's go ahead and go make it a little bit bigger. So, you guys know that I like to use charts and I am on the TastyTrade platform. And as you can see in the market, we've had for the past couple of weeks, basically since July 27th, we've been in we've had a sell off. We had this first leg down here, and then we had a little bit of a pullback right before we had from this high right here on September 1st, we had a low, a leg down, a pullback, and then we had a lower low. And so this low right here, and it even, got a little deeper with this gap down on what is this, the 21st. And then we got another couple down days. We even had a green day yesterday, but it was, it gapped down and then fought its way back a little bit, right? So you may say, well, why a or what is a put spread? And why do we call it a short put spread? Now, generally, um, if you're it's a short put spread because I'm selling a put and I'm buying a put to make it to define the risk. Now, let's go to the option tab and we'll get into the specifics of it. Now, I went and put the trade on in October. So I used the 24-day expiration. I sold what is now the 33 Delta, bought the 25 Delta. So if I were to put this on right now, I would click here, right? And then click here. So on the Tasty Trade platform, that's all you got to do is just click it. You click on the bid to sell, click on the ask to buy. That makes it a $5 wide spread. And I would be collecting $1.13 in premium. Now, when I did the trade earlier today, I collected 110 in premium. Now, in essence, what I'm doing is you say, well, I got a 67% probability of profit. And the reason why I have that is because I'm risking about two to make one. Now, most people would say, that type of trade you wouldn't want to do, right? But this type of trade is a high probability trade and puts me on basically without knowing what the market is doing at all. If I put this trade on 1,000 times, I should win 670 times. Now you will say, well, what about the other times that you lose? Well, I will manage the trade. So meaning there are things that I can do once the market gets down here. If it does, then I can roll the trade out in time and buy more time. I can sell the other side and pick up more premium. There are a lot of different things I can do to manage the trade. So that's one of the advantages of trading options. So right now, this is a bullish trade because, like I said, I sold the put. When you sell a put, that is a bullish trade. And so um, when you sell put spreads, you are bullish and you want the market to go up ideally. Now, the market can stay, let's go look at it, can stay right around in this area if it wants to. And I will still, over time, the options will decay in value and I make money through theta decay or time decay just over time. I'm down here at 419. The market would have to come down past 419 to beat me. So right now, and look, using my technical analysis that I use, I'm like, well, the market is oversold to the downside currently. My RSI up here, I have a little tab for the RSI. It is currently at 29. That doesn't mean that it can't go lower. It's just saying that, hey, right now we are oversold on the RSI. and on my stochastic were oversold. So I just need a little bit of a bounce. If I get a bounce um, early, I could get a bounce tomorrow or maybe Monday or Tuesday or something. I'll pop up into here and I'll be out of this trade because one thing about the trade, if I just try to keep 50% of the premium collected, I have an 84% chance of just managing at 50%. And so that's one of the benefits of selling options, that you don't necessarily have to be right directionally. You can be wrong. The market can come down some and I can still be make money over time. So one of the things that I will do with this trade is that today is 24 days, and on Friday, if I hadn't gotten anything by then, I may roll this out in time. It just depends on where the market is. And also, I will be monitoring news. We do have a news event this weekend that I believe is already baked into the system, into the price of options, and I'll talk more about that on Friday. So we'll make sure you hit the like button and subscribe button. Tune in because Friday we will go over what I think is baked into the volatility of the market, and we'll talk about this trade. We'll monitor this trade and see how it's doing. And if it's not doing so well, which is quite possibly the market could be down, we will go over management rules and ways to manage the trade. So if that, guys, I'm gonna be out. Make sure you hit that like button and subscribe. If you wanna sign up with the Tasty Trade platform, in my notes there's a link there that you can click on to go ahead and sign up with Tasty Trade. I do use the platform. I am currently trading in the platform now, and it's one of the best platforms, especially for trading options, right? Um, I like to be able to look at the expected move on the option chain. I like how easy it is to just click on options. I mean, you come click somewhere, click here, and put your trade on. It's pretty easy, and I like the technology. Moves pretty quick. I like the way it looks. And they have all the tools for anybody that likes to use technical analysis. They have it. So with that being said, guys, I'm gonna be out. Remember, tune in for later this week. We're gonna talk about some big news event on Friday. Peace.